Well, awesome. Let's get started. We're 2 minutes after. Welcome, everybody, to our biweekly webinar. I'm co-host Ryan Poole. Happy to do this biweekly webinar with my host, Jim Brown, here from New Path Title, the awesome closing software, Title Leap, and of course, Title Advance. So people that don't know, I'm an agent out there in the trenches, been doing this over 20 years with you all. Also the founder of RealTrade, which is an online marketplace and social media platform for real estate. Happy to say now we're well over 3,000 agents and growing. We represented by over 500 different brokerages now on the platform. And we have some exciting new development that we're pushing more buyers and sellers to you guys. So I tell everybody, create a profile in RealTrade. It's free. And imagine this, you can get direct leads right off your listings, right on RealTrade. Of course, you can network with awesome service providers like Jim. But hey, it's always a pleasure, Jim, to host this webinar with you. This is a big one. We have some big FIRPTA changes to the FAR bar that we're going to be going on over, and of course some federal income tax basics. So we're excited, Jim, for this one. Why don't you take us away?
All right, so I'm writing the outline for this, and it took way too long. So I am going to do my best to keep this thing as simple as I can. And midway through it, I decided I was going to put together a cheat sheet. I'm going to make that a part of every discussion so you guys have a shortcut tool that you can rely on. So I'm going to go over some basics. Before we get started, I want to mention a couple of things. Crossing for cystic fibrosis. We do this every year. We raise $1 million annually as a group for cystic fibrosis, for the families of kids and adults suffering with cystic fibrosis. Our event's coming up. I'm going to hit you guys up for small donations. At the end of the day, I always say at the beginning of every one of these events, this is too much work. This is the last year I'm going to do it. And after every event, I get so much satisfaction when the families of the kids call me and text me and tell me how much they appreciate what we're doing. It's a worthwhile cause.
And people don't know. I mean, the crossing for a cure. I mean, they paddleboard from Bimini back to Florida. I mean, it's incredible.
14 hours.
14 hours.
Paddleboard in the dark. Start at midnight on Friday. Get back on noon if you're doing great. 2 o'clock on Sunday. I mean on Saturday. 14 hours straight. 81 miles. I've been a captain every year since the onset. I'm the longest running captain on the tour. So we have a reoccurring social on the last Thursday of every month. Title Advance. If you're not using them, all I can say is, I don't understand why. We just saw a deal, real estate agent avoid a ton of pain working on a listing that was never going to close by using a Title Advance. Like and subscribe always. Don't forget our closing cost calculator updates that take into consideration all the new twists after Sitzer and NAR. My goal is to give you guys content you won't hear anyplace else. I'm going to try to keep this short. If you can turn on your camera, it's great. Throw your questions in the chat. Absolutely text me 24/7. You can get a hold of me at New Path Title. Click on 24/7 attorney support. I don't care if I'm not your closing agent. I'd be happy to answer any question you have. All right. Without further ado, Ryan, is there anything you want to add before we jump in?
No, excited for this. We were talking a little bit about the market and everything like this, and it's just I'm just happy to see agents on here, guys. Keep learning. Now's the time to sharpen all your skills, and be the most informed agent out there, because it's it's getting a little difficult. I mean, there's a lot of stuff in the news. Obviously, everybody's reading, so stay sharp.
And we try to be, like I call ourselves the lifeguards, right? We see everybody in the pool. We can tell you everybody's mistakes, and we can improve everybody's stroke because we get the bird's eye view of what everybody's doing. And so, like I always say, iron sharpens iron, and I'm going to use what we learned from other agents to better the profession for everybody. I'm going to bring it up one more time. If you haven't read the Danger Report from many years ago, I think it was 2017, you can just Google the Real Estate Danger Report. The biggest threat to the real estate industry was the unknowledgeable agent. All right, with that somber realization, we're going to jump right into it, you guys. So today I want to talk about FIRPTA, recent changes to the FAR bar, and a guide to closing, and the glide to closing. And if you get it wrong, you're going to have what we had last week in our office, just a bunch of upset people because they didn't know the rules, and they didn't know and mainly they didn't understand the issues. And we're not talking about new agents. We're talking about 20-year agents and another meltdown with a 40-year agent. So warm up, the danger of AI. AI is a great tool. If you get it, it'll get you in the ballpark, but it'll get you it will get you in the stadium, but will rarely get you to your seat. Do not rely on AI for answers unless you know what the right answer is. I saw recently a real estate agent using AI to answer contract questions. They texted me the AI answer. It was 100% wrong. I saw a real estate agent using AI to calculate contract days. They sent me the screenshot of the contract days. It was wrong. And then the thing that really upset me was they told me they couldn't figure it out. You guys, I'm not making this stuff up. I don't want anybody to feel like this is a safe zone. I don't want anybody to feel like they're being held out. I'm just saying, like, these are the agents that you guys deal with, right? We have a honed group of sharp agents on this podcast, but when you go out into the wild, you're going to encounter all kinds of beasts. And some of them are going to be agents that just don't know what they're doing. So this is stuff to look out for. Client calling me with legal solutions. I talked to a gentleman yesterday, he wanted to engage me to do work. He had this whole AI analysis worked out. And if I told him the way the law worked, he wanted nothing to do with it. Misstatements of the FIRPTA from, so when I was researching some FIRPTA issues, I was using AI and I was getting statements from contracts of other states. So for example, Washington state has a very different contract than Florida. And if you don't enter the term Florida or Florida law or Florida FAR bar or some contract, I got numerous hits referencing one document published by one title company in Washington, and I'm doing searches in Florida. It even got the definition of FIRPTA wrong. AI misstated FIRPTA. It called it the Foreign Investment in Real Estate Tax Act. It's FIRPTA is the Foreign Investment in Real Property Tax Act. You want to look like not the sharpest agent in the drawer? Misstate an acronym to one of your clients. That's the sure way to get shot out of the cannon. There are already thousands of examples of realtors exposed to buyers and sellers for using AI to write or enhance their listings. I couldn't even believe it when I started researching this, that agents are using AI and they're stating the location to schools or shopping centers or whatever, and they're getting the distances wrong and they're not double checking, and then there's lawsuits that are resulting from it. It's crazy, but it's happening. All right. Here's the feel-good sales agent tip for the day. I heard a great statement on the current economic climate from an investment strategist that I really admire. This is a personal friend of mine. He's been doing this for a million years. The big guy at Morgan Stanley. He says, if you think 5 to 10 days or months, you might get pessimistic and paralyzed. And he was trying to convince me to invest in something. He says, if you think 5 to 10 years, you're more likely to be optimistic and confident. And then the thing I would say to your client is, are you going to be in this house 5 to 10 months or 5 to 10 years?
Right.
I think that sets the stage for positive interaction when people are talking about economic craziness. All right, FIRPTA. It's April 8th, 2025, and FIRPTA has been around for 45 years, and it still gives many real estate agents anxiety. That is, if they even understand the issues. I talked to a 20-year productive agent recently who had no idea what the rules were, had no anxiety before the deal blew up, but was melting down once it did. The recent changes of the FAR bar have created more causes for discussion in our office, and we have seen for a while. FIRPTA does not make intuitive sense. It's just one of those rules you have to know, and if you don't know what you just have to ask. Early questions of the seller and disclosure are key. FIRPTA is not a title agent issue. The biggest single mistake is everybody says FIRPTA is a title agent issue. FIRPTA is a buyer liability. We're going to go over a couple things. If you remember nothing from this podcast, one of the key things I want you to remember is FIRPTA is a buyer liability. A title agent is not essential for a FIRPTA sale. A FIRPTA sale can happen with or without a title agent. It's not like the title agent is necessary. The title agent is a neutral intermediary. They get money, they get documents, they get parties, everybody comes to a party, and everybody parts company with what they need. In other words, anybody can buy or sell property without a title agent. Investors do it all the time without title agents, but they won't know the FIRPTA rules and are being penalized by the IRS. It looks like the IRS issued 3,000 to 6,000 FIRPTA penalties last year. What does FIRPTA, why does FIRPTA exist? Sometimes context helps you and helps you explain the things to buyers and sellers. FIRPTA exists because tariffs are not a new thing. We've survived them before, we'll survive them again. 1980, Japanese investment was pouring into the US, buying up property, driving up prices. New federal laws were created under Carter, implemented by Reagan. Japanese investors were making untaxed investments in the US, driving up prices. FIRPTA was a tariff, per se, on Japanese investments to keep Japanese investors to keep them out of the US, or at least keep American investors with Japanese investors. Key concept, FIRPTA is not a tax. FIRPTA is not a tax. FIRPTA is a withholding. Think of it as a pool of money created at closing the IRS holds on to that the IRS can dip into if the seller has a tax, if the seller made money. But FIRPTA is not a tax. If the seller made no money, the FIRPTA withholding goes back to the seller. Very important when you're talking to your sellers, you say, if you didn't make any money, you're getting the money back. We just got to park it with the IRS for a little while. Seller will then calculate a return, file the return, and many times get all their money back. It's pretty easy. What I've seen in 40 years of real estate transactions, sellers agents tell their client and me, FIRPTA is a tax. 110% wrong. Sellers tell me FIRPTA, sellers tell me FIRPTA is a tax and I don't want to pay it. I can count on one hand the number of times agents or buyers have told me they understood FIRPTA is a buyer's liability. That's the second big takeaway I want you guys to keep with you. We'll go over in a minute in a little group, but FIRPTA is a buyer's liability. Nobody understands that. Once you can wrap your head around that, right, we are in the business leverage game. Once you can wrap your head around the business leverages, you can make buyers buy and you can make sellers sell and you can encourage people to close and all the little things. Once you understand that leverage, that FIRPTA is a buyer obligation and liability, and I'll give you some examples that'll stick with you, then you'll understand what the FIRPTA game, what the business leverages are. Did you know a botched FIRPTA deal can lead to a buyer selling their personal assets to cover the FIRPTA liability long after the closing to pay off a seller's FIRPTA tax obligation?
Yes.
Ryan, you're making the appropriate face. I mean,
this is amazing. No, I mean, I'm working with some foreign, buyers and, now probably sellers, some Canadian buyers that I sold property to that, let's keep going.
There is no way in the world an informed buyer would ever allow a party other than the escrow IRS to escrow the FIRPTA withholding. We're going to go over that in a minute, but that's the third biggie I want you to take away. I have heard so many attorneys misexplaining FIRPTA live and on social media. It's rampant. It's complicated. And I hear attorneys on a regular basis misstating the rules. Agents, especially buyer's agents, are almost always included in a lawsuit when there's a FIRPTA failure. The last FIRPTA failure I saw was for $50,000 in IRS penalties on a $10,000 payment that was a couple days late by the title agent, and the buyer owes the penalty. And a big takeaway, AI gets the FIRPTA rules wrong. They aren't that complicated, but it gets them wrong. And the new changes to the Florida FAR Bar actually help clarify the rules. Intuitively, FIRPTA, so the secret to FIRPTA, know your contract. It's as simple as that. It literally is as simple as that. Know what the contract says and you'll never get it wrong. Intuitively, FIRPTA seems misplaced because the seller created the problem, but the party with the FIRPTA liability is the buyer. Read each line carefully. Seller's disclosure, line 242. I'm going to do something I usually don't do, but we're going to go back to the contract. Can you see the contract, Ryan?
Yeah, we're getting questions in the chat too. So,
All
you know,
right. Before I read, do you want to jump into them, or would be look at the question would be more
yeah. Well,
appropriate?
first one, how much will be the withholding for offshore companies? Like what?
We'll get into that.
We'll get
FIRPTA
that, and
applies to commercial and residential. Yeah.
then Wendy goes, how do you calculate the net for the withholds?
We'll get into that.
What they sold minus what they paid. And what
No.
happened if an
Yeah.
offshore company is the seller with no EIN number? Yeah. Wow.
Don't feel bad, Wendy. This is all the stuff that I hear misexplained frequently, but we'll clarify it very shortly. So line 242, underneath the paragraph called disclosures, you've got your seller disclosures, including line 242, changes to the contract. Right in the very first sentence, seller shall inform buyer in writing if seller is a foreign person as defined by the Foreign Investment Real Property Tax Act. Right there. Seller shall inform in writing. We're going to go over why that's important. Buyer and seller shall comply with FIRPTA, which may require seller to provide additional cash at closing. Full stop. That is such a big statement, and I've seen so many contracts fail at the closing table because sellers had to come to the table with FIRPTA money they didn't expect to come up with, or even have to come out of pocket to make a deal close and send money to the IRS. And now buyers have a specific contract remedy they can rely on, specific performance, and you'll get your attorney's fees. Does anybody want to sue to get a piece of property? Absolutely not, but it's now in the contract. So it makes it easier for us to use that as a sword to keep deals together. If seller is not a foreign person, seller can provide documentation, and that goes, we'll get into that stuff in a minute. In section B of the standards.
Yep. Alex just had a quick question too. He said, I
Yeah.
see some listings with the FIRPTA notification in the description. When must seller identify FIRPTA? I guess it would be, at the time of contract, right? At the latest.
Yeah.
Yeah.
We'll go over a quick checklist of what to do and how to prepare and how to get in the game early.
Alex, and my thing would just be, like you said, disclose it on a listing. So you see an MLS listing, just disclose it from the onset so you're not wasting you and your seller's time or buyer's time, because then some people don't want to deal with FIRPTA in general.
Yep. And then a lot of times they don't want to deal with it because they don't really understand it, and they've heard from their agent or they've heard from a friend, it's the tax and blah, blah, blah. We went over the sellers may have to bring cash.
Just
Wendy,
a lot of questions.
line 552, if there is no withholding certificate, requires the buyer withhold 15%. The buyer withholds 15%. The language of the contract is super, super clear versus how it used to be. The buyer withhold 15% of the amount realized, the sale price, not the profit or loss.
I get it. So it's 15% of the contract price. Wow. Has nothing to do with the.
Not the profit or loss. No withholding is necessary if buyer is not a foreign person. We'll go into that in a minute. And seller signs an affidavit. If the seller received a withholding certificate, then the buyer will send this amount to the IRS. So here in the contract, it now breaks it up into 3 sections. Can you see my cursor, Ryan?
Yeah.
You have I, you
Yeah.
have two double I, and you have 3I. So it divides it up into 3 scenarios. So the first scenario is no withholding is necessary if the buyer has if the seller signs an affidavit that they are not a foreign person as defined by the IRS. In the second scenario, if the seller received a withholding certificate, then the buyer will send this amount to the IRS at closing.
It's a buyer liability.
It's a buyer liability. Under 3II, 3Is, the one we see the most, this is the most frequent one, if no withholding certificate is issued by the closing date, then the buyer holds the 15% and either, now here's the biggie, pays the 15% to the IRS or allows a third party to hold the money. That is stipulated in this paragraph right here. Line 568, I'll throw something in there. Line 568. Read what line 568 says. At buyer's option, either timely remit the withheld funds to the IRS or place the funds in escrow at the seller's expense with an escrow agent selected by buyer. Now, why is that important? I'm going slowly because I want you guys to digest this stuff. No buyer in the world that's been educated on FIRPTA would elect to let a third-party title agent hold their money, a third-party escrow agent hold their money. Here's the cheat sheet to everything we just went through. Seller's agents. At the closing, at the listing appointment, after the seller signs the listing agreement, just like you would ask about mortgages and debts, ask the seller, have you ever filed a U.S. tax return? Do you have a U.S. Social Security number? If the answer is no, refer them to a tax advisor or one of the FIRPTA consultants. In the outline, I've given you guys a bunch of FIRPTA consultants. If the seller is determined, if the seller is bound by FIRPTA in the listing, right, this is a FIRPTA sale. Now you've satisfied the first element of the contract where it says that the seller is going to disclose to buyer in writing it's a FIRPTA sale.
Can it be in the broker remarks, or do they have to put it in the public remarks? Do you put it in the public remarks?
If you put it in the broker, it won't make it into Zillow. If you put it in the public, it'll make it into Zillow. So
Right.
I would put it in both or public.
Put it in both or public.
I would put it in both.
Okay.
Do the FIRPTA math, just like you would do a mortgage. Is the seller going to have to bring money to closing? You can use a title advance. You can look at the face values of the mortgage. This is a 15-minute exercise, you guys. You don't want to bring
title advance can tell if it's a foreign national that owns.
No, you're going to use the title advance and you're going to figure out what the mortgages are.
Yeah.
And then you're going to say whether there's equity or not. It's just a thumbnail. And if you've got a $900,000 sale, if you got $1 million sale and there's a $900,000 mortgage that was taken out a year ago or 2 or 3, you know it's still going to be almost a $900,000 mortgage after closing costs and commissions. You're down to $960. You got 40 grand to pay 150 grand in FIRPTA. It looks like your seller's coming to the table with $110,000. Have that conversation early. Do you follow me? You got $1 million sale.
Yep.
$900,000 mortgage. There's 100 grand left over. Let's just say you got 60 grand in closing costs. I mean, I didn't even do the calculation, but let's just say 60. So there's 40 grand left over that the seller would put in their pocket if it wasn't a FIRPTA deal. But the seller in that transaction is going to have to ship through the buyer 150 grand to the IRS. They only pocketed 40. They're going to have to come out of pocket 110 so they can send 150 to the IRS. Ryan, I can see you're getting uncomfortable.
No, I know. I mean, it's
terrible.
So luckily I haven't dealt with a lot of foreign national sellers, but I've dealt with buyers, you know, but
well, we'll go over the buyer cheat sheet in a second.
Yeah.
Do the FIRPTA math early, make sure no one's having to come to the table with money. Get the seller to apply for FIRPTA withholding certificate early in the deal and remind them frequently. Create that paper trail, right? You don't want to be that agent that we just had in the office last week and had no clue it was a FIRPTA deal, and I'm telling them, reading the new provisions in the contract, and everybody's coming unglued like we did something wrong. Buyer's agents. If in your transaction, the listing says FIRPTA, or you confirm with the seller's agent that it is a FIRPTA sale, tell your buyer in writing these 3 things. This is a FIRPTA sale. Ask if they are aware of the FIRPTA rules and suggest they consult a FIRPTA expert.
So let me ask you a quick question here, Jim. So let's say you do a FIRPTA closing, you know, the buyer is supposed to ship the IRS the 15%. can you do that at closing from the proceeds right there for them? And so like they're not sending stuff to the IRS, right? I mean,
Correct.
yeah.
Now, although think of the title agent kind of like your CPA. They provide you all kinds of documents. You sign the documents. You pay your taxes. If you come back with a penalty, what does your CPA do? Ooh, that's on you. The title agent is just there to send whatever documentation values are provided to them under the documentation provided to them. So if you get an 8288 from your seller, that stipulates the value that goes to the IRS. It's the buyer's liability. How many times have you seen a buyer actually understand what an 8288 is? They don't.
Right, and that, on top of that, Ryan, on the form that's filled out, it's all the buyer's information. It's the buyer. They name the buyer as a withholding agent. It's the buyer's social security. Like we just send the money on behalf of the buyer, but it's all attached to the buyer.
I mean,
And if the FIRPTA is wrong, because the title agent sent it a couple days late and the IRS knocks on your door, the buyer's door, 2 years, what was it? 3 years after the sale, 3 years after the sale, they wanted 50 grand from the buyer and on top of the $10,000 penalty.
yeah. So, I mean, basically any foreign seller that you have in your network, unless they got 25% equity in their property, they're not going to be able to sell the property.
Or
Right?
they have to be prepared, but they're going to get the money back. Most of the time they get the money back. FIRPTA is not a tax. FIRPTA is a withholding. You got to be able to explain this stuff to your clients properly. Yeah, you're going to sit without your money for a little while. You're going to file a tax return, but most of the time you're going to get your money back. Not every time, but we're going to go into
I
that.
mean, what decides if they get it back or not, Jim? Like, I mean,
Huh?
like who decides and what?
We'll go over that. We'll go over that.
Okay.
All right, so if in your transaction, the listing says FIRPTA, or you confirm with the seller's agent it's a FIRPTA sale, tell your buyer in writing these 3 things. And make sure you suggest they get a FIRPTA tax consultant. Follow up with the seller's agent frequently until they tell you the seller has applied for the withholding certificate. Get the contact info for the FIRPTA agent and follow up with them. Treat this like you would treat a mortgage, right? So now you're a buyer's agent. You do these little things and you got to put on your checklist that you're going to follow up with the FIRPTA agent, just like you're going to follow up with the mortgage lender. It's just one of those things you have to do. Tell the title agent to at the contracts. Now this is for both agents. Tell the title agent at the contract submittal, this is a FIRPTA sale and the status of the withholding certificate. And if you ever did this, I would fall out of my chair and feel like I went to my grave, a satisfied lawyer. Even better, in paragraph 20, right, this is a FIRPTA sale, and in the ideal world, although I've never seen this, also write the FIRPTA agent is Sally Mae at FIRPTA's R Us and the contact info. If you guys ever did that, I would hang up my skates as a attorney. Like that would be that there are some really sharp agents and there are some agents that are not on their game, and we have to always be dumbing down our game. And I'm talking about as a title agent, I'm talking about as a seller's agent working with an unknowledgeable buyer's agent. But we have to know all ends of the deal so we can do it when we do work with an agent that isn't as savvy as us. It's just that's the way it is. Last week, I had a 40-year realtor tell me, I don't know what to do. I have no transaction coordinator on this deal. You can't be that agent. You got to know this stuff. And if you don't know this stuff, you just call me and we talk about it. So that's your cheat sheet. If you don't, if you don't do anything more, if you don't remember anything more, if you don't retain it, just remember the cheat sheet. The cheat sheet will get you to the goal, the short-term goal of just knowing how to handle the transaction. As simple as that. All right. FIRPTA in general. If you only remember 3 things from the discussion, please make them this. No buyer who understands FIRPTA exposure would elect a third-party agent hold FIRPTA. That's that election in the contract where the buyer decides where the money goes. The choices are third-party escrow agent or the IRS. There is no buyer that I could imagine that understands FIRPTA that would ever say, park the money with a third-party escrow agent. Early in the deal, find out if it's FIRPTA and follow up and disclose. That's the second big takeaway. Third big takeaway is a FIRPTA failure can have huge financial impacts to the buyer long after the sale. It can also have huge financial impacts to the agent. But the big takeaway is, don't forget, this is a buyer obligation. I even saw an IRS notice where they were going to sell assets, levy and sell assets of the buyer 3 years after the sale. A seller can reduce the amount. Let's see how agents can explain FIRPTA in one sentence. So you're with your client, they're freaking out or they're not freaking out or whatever. You want to look savvy. Here's the one sentence explanation for FIRPTA. If a seller does not have a U.S. taxpayer ID or social security number, the buyer pays 15% of the gross sales value to the IRS at closing, and the seller files a tax return to get all or some of the money back. That's all FIRPTA is, start to finish. A seller can reduce the amount they remit to the IRS by filing a Form AE288B, also known as a reduced withholding certificate. Here is where the rub comes in and why sellers want third-party escrow agents to hold on to buyers' money. Here is where the rub comes in, and you're going to get unknowledgeable tax consultants, attorneys, agents, title agents insisting that they hold on to the money. Here's the rub. You can send, what's a seller's goal? Send as little money as possible to the IRS. So you apply for an 8288, that allows the title agent to send less than 15% to the IRS. The problem is the 8288 by IRS rule is a 90-day process. Who's ever started a FIRPTA deal 90 days ahead of the ball? And the reality is the 8288 takes 10 months to a year. Taj, how long have we been sitting on that 8288 money that we have?
It ended up being like a year and a half before they responded back.
There is no benefit to doing this stuff that way, and there is only risk to the buyer's agent. Imagine this, it wasn't Jim Brown, you know, the upstanding attorney. Imagine this was another attorney who has rated their trust account to go to Las Vegas with trust money, assuming they're going to come back on Monday with more than they left on Friday. Whereas buyers, how much are we sitting on an escrow in that one, Taj?
460 grand.
$500,000. I can guarantee you our buyer in that deal has no clue what they signed, no clue the risks. They just went through the transaction without getting great representation from anybody. And our job is to sign everybody up for whatever deal they signed up for, not to take deals off the tracks or create heartburn, but it's to smooth stuff out when it gets done. And so now we have $500,000 money of buyer's money waiting for the reduced withholding certificate from the IRS so we can send the money in and then send some money back to the seller. A year and a half after the sale. I guarantee you that's fallen off the radar of the buyer the minute they walked out of the closing room, and they had no clue that they have this ongoing exposure. Alex, what do you got?
So first of all, it makes sense that it's the buyer who's responsible, right? Because the government's
Sure.
not going to go chasing a foreign entity. It's a pain in the ass. So it does make sense. Number two is, and I know you're not a CPA, but I figured I'd ask. Would it make sense for my client who owns a property and is now renting it to start the 8288 process and just have it in the works?
Absolutely.
Okay. And then lastly is, if they have no mortgage, then this process is less complicated.
No,
It's the same.
same.
Okay.
Yeah, the mortgage makes it a business hurdle that may force the seller to bring cash to closing, but it doesn't complicate the process from the buyer, seller, or title agent's perspective. It complicates the listing agent's job a little bit because you got to do that math up front. I call it the FIRPTA math. You got to do the FIRPTA math up front to figure out if you have a deal that the seller is going to have to bring money to closing on.
Okay. Got it.
We got
Thank
a
you.
couple other questions if you want to, I don't know if you want to wait on these.
Let me get through this section and we'll jump into them. I'm sorry, guys. So now the issue is convincing the buyer. So you got this dynamic, right? The seller, this is the tension. The seller wants to send as little money to the IRS. The buyer doesn't want exposure. And so the seller, if you're in a transaction where everybody understands the issues, is trying to convince the buyer, hey, park the money with the third-party escrow agent. And they say it's going to take 90 days, but the reality is it takes a lot longer. And if you park the money with the IRS, you can never have a failure, right? If you park the money with the IRS, it's not like the IRS is going to say, oh, we didn't get the money. Even if they did say we don't get the money, you send them the form and they got the money. It's not like they can say they went to Vegas with it and blew it. If you park the money with a third-party escrow agent, you can Google title agents, Palm Beach County, misappropriated escrow funds. You're going to find 6 hits. They're all for big money. Some of the people have killed themselves. Some of the people have left the area. Some of the people are in jail. That money's never coming back. That's the buyer's obligation. Does everybody follow the tension and the rule? The buyer has no control of the seller after it gets done. So now the money's sitting with a third-party escrow agent. If you don't send it to the IRS and you're at the mercy of the seller trying to facilitate the transaction and you don't have any tools to do that, there's no business leverage. The buyer has all the exposure, and the biggie, the title agent and the third-party escrow agents, they lose money. The IRS does not lose money, and that's what what I was explaining before. But what were the questions? We can jump into that stuff now. We're going to go over the FIRPTA rules generally. What do you got?
Is the property for sale if the property is for sale is owned by a trust for a husband and wife is American and the husband is a foreign national, would you need to disclose and
Yeah.
to
Yeah, we're gonna get into that. Mixed transactions.
and Frederico has a question, does the buyer liability expire ever? Like how far back can this go?
I don't know. That's a good question. I'd have to research that. But like I said, that one that most recently comes to mind was 3 years old. And the buyer didn't get a IRS notice, and the failure was in 2020. The buyer didn't get a notice in 21, 22, or 23. And then early in 24, they got a notice of failure for a $10,000 payment that the title company was supposed to pay to the IRS. The penalty that the IRS tacked on top of that was 50 grand, 48 grand, something like that. A FIRPTA seller can avoid FIRPTA if the buyer signs a FIRPTA affidavit. In so many deals, I get these selling agents who don't understand the transaction, and they get belligerent, mad, obtuse when the buyer won't sign an affidavit. Well, however, my opinion is an informed buyer would never sign a primary residence FIRPTA affidavit allowing the seller to avoid FIRPTA. Why? What if the buyer sells within the 2-year time period? The buyer swears they will reside in the home, and now they're selling the primary for any number of different reasons. What if the buyer or the buyer's family gets sick and they can't reside in the home? What if the buyer has every intention to reside in the home but gets a better job offer? I mean, we've signed buyer's affidavits in this office, but nobody knew what they were signing. They're just coming in to sign. And now you sign the buyer's affidavit, there's no FIRPTA withholding, and you get a better job offer in another state, and that house isn't your primary for the 2-year period. You're
Just to
renting
be
it
clear,
out.
there is an affidavit that the buyers can sign if they're going to be in the home for 2 years. They don't have to do the FIRPTA withholding
Under certain other additional rules that we're going to go into. But I want to stress to you, I just don't want you to get caught up in the dollar values and all those things. If you're representing a buyer and the seller's agent is saying, sign the affidavit, sign the affidavit, sign the affidavit, you would say, hell no. And here's why. And you've got some basic, ideas here. You get the job out of state and you want to rent the property out.
Yeah.
Now you're liable for the seller's FIRPTA? Really? Sorry, I get a little emotional on this stuff. So generally there's no FIRPTA or there's reduced FIRPTA under these facts. The sale is under $300,000 and the buyer will reside in the property 50% or more of the time occupied for the next 2 years. So it's going to be their primary house. They're going to reside in the property 50% of the time over the next 2 years. If the sale is under 30 grand, no FIRPTA. But why would your buyer ever sign that is my point. Only 10% is due if the sale price is 300,000 to $1 million and the same set of facts. The buyer will reside in the house 50% of the time over the 2 years, next 2 years after the sale. The seller obtains an IRS certificate and gives it to the title agent before closing. These take 90 days. We talked about that up above. And the seller meets the IRS substantial presence test. The problem with the IRS substantial presence test is it could subject them to liabilities for other tax burdens and push them into a higher tax bracket and allow the US to collect income tax on sellers' international properties and international incomes. You don't want to qualify your buyer for the substantial test unless they understand. And I've heard agents explain it to them, explain it to clients, and it's not the best piece of advice. When FIRPTA is paid to the IRS, the FIRPTA agent obtains a tax ID, prepares a tax return, and submits this to the IRS. The seller early in the deal, your job is to steer your seller, or if you're a buyer's agent, steer the seller's agent to get them to get this FIRPTA certificate to the title agent before closing. Then they're going to get a tax ID, then they can apply for the return in a normal filing cycle. You know, so we all apply for our taxes by April 15th. It's the same cycle. IRS returns the FIRPTA payment, if any, to the seller on the same schedule as the regular taxing cycle. Generally, the first $40,000 of gains is exempt from US taxation. The balance is taxed as short-term or long-term capital gains. In the contract, seller agreed they have to come out of pocket with the FIRPTA money. We talked about that, even if it does not leave enough in the sale revenue to pay for FIRPTA. FIRPTA agents typically charge $500 to $1,000. So the person that's going to give you your withholding certificate, we have a list below that you guys can refer to, typically charge between $500 and $1,000. And then the fees to file the return are $1,500 to $5,000, just depends on how complicated the return is. But most of them I hear are on the lower side. The title agent fees and a FIRPTA withholding are usually around $250 to $500. So you got 3 sets of fees. You got the one for the withholding certificate. You got the one for the filing, and then you've got the title agent. FIRPTA can apply to non-real property interests. We don't want to even get there, but FIRPTA can apply to non-real property. We only deal with I should take that out. That's just going to be confusing. Well, if you have a mixed sale, no. I'll leave it in. Agent FIRPTA misstatements I hear frequently. You can't, you know how you guys, you put something in and it gets the little red line when you misspell something? If you type in YCMTSU, it doesn't give you a misspelling. You can't even make this shit up. It's become so frequently used that now it doesn't even cite it as a misspelling. All right. This is stuff I've heard agents say that you just can't even make up. Transfer the property into an LLC or a corporation and pay no FIRPTA. I hear this all the time. This is what I hear from most Miami agents. Whenever I talk to a Miami agent, that's one of the first things I hear. Transferred into an LLC, you'll owe no FIRPTA. That is generally absolutely wrong. And transferring the property into LLC or corporation does not defeat FIRPTA. And in many cases, it may push your taxpayer seller into a higher tax bracket. Instead of just withholding 15 that they can claim on, you could be pushing them into a general partnership or corporate tax rate of 21 or 37. That is how you get sued. If a one member or a multi-member LLC is a FIRPTA seller, it's a FIRPTA sale. They just have to partition the FIRPTA obligations. These are misstatements that I've heard from agents. FIRPTA, these were explanations of the misstatement. So the misstatement was transferring into an LLC defeats FIRPTA. Here's the right statements. Here are more misstatements I hear from agents. FIRPTA is a tax. FIRPTA is a seller issue. Like I heard an agent on a 3-way call screaming at the buyer at the top of their lungs while I'm driving in the car with my wife. FIRPTA is the seller's business. Why are you getting so worked up, buyer's agent? My wife was like, oh my God, does like nobody know the rules? And like she couldn't understand. She doesn't know the rules either, but she couldn't understand why it had become so emotional, because the only reason was late in the deal, people were like, oh my God, there's rules and I've been saying the wrong thing. And, you know, for a lot of people, the best defense is an offense, and they just start screaming, and you have to pull them back to the contract. You have to pull them back to the rule. You have to center yourself, pause and get back in. But it's just a disaster when this happens. I've even heard agents say FIRPTA has nothing to do with buyers. An agent last week told me FIRPTA is a title agent issue. 20-year agent. FIRPTA has nothing to do with me. This is the title agent. They were the seller's agent. If the seller has a loss, no FIRPTA is due. I've heard agents say that. The reality is FIRPTA is due on the gross sale price. It has nothing to do with profit or loss. And I've had agents tell me, no, there's no FIRPTA. We don't have to do any of that. I knew about this a long time in the deal. There's no FIRPTA requirement. We still need a withholding certificate to give to the title agent. Still needs a withholding certificate from the seller's FIRPTA agent. FIRPTA is due on the sale regardless of price, profit, or loss, and the contract now states buyer will pay. I don't know why I wrote and. Oh, buyer will pay even if they have to come out of pocket to close. We talked about that. And then here's the bonus topic that we give you guys every week: how to control title, even if you're representing the buyer and then you're in a county where the seller chooses title. Write us in paragraph 20. If it works, it works. If it doesn't, it doesn't, but we'd love to be your closing agent. And then here are some FIRPTA agents you guys can refer to. This one, I particularly like these two. I tended to go towards smaller companies, but in this situation, FIRPTA is so complex and they have agents standing by. I've called them on FIRPTA questions and they have somebody who answers. I'm not even paying them and they're answering my questions. Wendy, what's up?
You're on mute, Wendy.
Sorry. Okay, so if the buyer is paying the FIRPTA, if you have like,
You
because
have no idea when you say that out loud just how happy that makes me, because I've heard so many misstatements. So, but you go ahead. I'm sorry.
well, I have to be completely honest with you. I thought the seller was the one that had like, this has blown my mind. And I'm actually representing a FIRPTA right now. So I can't tell you how much I appreciate you doing this today. Because a lot of this is completely new to me. So thank you for doing this, number one.
Wendy, you are in a safe zone, and I so appreciate the fact you are operating completely naked.
Yes. So it's funny,
mean,
right before this, my
reality.
seller said, hey, can we have a chat today? So all this information is great. But just so I'm clear, so I do have a property listed for sale. If we get a buyer that makes an offer on it, say it's 325, are they paying an additional 15% or that? Okay,
If
so
it's 325, it's 15% of the 325. And so you're gonna take, what's 15% of 325? The seller is gonna pocket the difference between 325 and 15% of 325.
the seller's pocketing it?
Yeah, so what happens is you got 325 grand, and just so that you feel safe, on that original comment, I said, I am naked many times dealing with people on issues I don't understand. And I just tell them, this is something I have to go back and research. You know, there's nothing wrong with doing that. Too many agents say, oh, I have the answer. And then they call me up later and I'm like, no. And they go, oh my God, how do I walk that back? So you have 325 times 0.15 is $48,750. So the escrow agent, without additional instructions in the 8288, is gonna put in an escrow account $48,750 minus 350 grand. If there's no mortgage and assuming the closing costs are next to nothing, they're gonna give back to the seller $301,000. And then the buyer is gonna take that money and send it to the IRS. Buyer isn't logistically doing anything. The escrow agent is gonna do it, but the buyer signs the forms that say the escrow agent is authorized to do it on my behalf. So in the eyes of the law, the buyer is doing the remittance.
Okay, but it's still coming technically out of the seller's proceeds.
Proceeds of sale.
Okay, that makes sense. Okay,
So
thank you.
the seller with no mortgage, the seller in that transaction and assuming no closing costs is putting 401 grand in their pocket. And the title agent is sending roughly $49,000 to the IRS. Now, if the seller, I'm just going to throw a little wrinkle in there, if the seller is somewhat knowledgeable, the seller is going to try to convince the buyer to leave the money with the title company while they go out and get their 8288B approved. And I'm glad you brought up this example because I would suggest that the buyer not do that. The buyer has no relationship or owes nothing to the seller on this issue. And why would they take that exposure? Title agents take their money and go to Vegas all the time and get busted for escrow account problems.
Thank you.
Does that clarify everything on that issue? Alex, what do you
Yes,
think?
thank you.
So, excuse me, disclosure to the buyer is important, but why would a buyer proceed in a FIRPTA transaction?
And there's a lot of buyers I mean, I shouldn't say a lot. There are some buyers, well, all right, somebody in my office put it best like this. We were discussing the topic and they said you find two identical condos in the same building with the same view at the same price. One's a FIRPTA and one's not. What are you going to buy?
Well, without the FIRPTA.
And that's why buyers want to know right up front. And quite frankly, I've talked to buyers over the years that actually their CPA I had lunch with a couple of years ago, and he said, I would never buy a FIRPTA deal unless I was the one handling the money myself. Or unless they insisted the money was going to go back to the IRS. If it's going to ever end up in a third party's hands, forget about it. I'm out.
Gotcha.
But the thing that becomes most difficult, and I don't want to harp on something if you guys already understand it, is the dynamic of a seller leaning into, screaming at, pushing their selling agent to lean on the buyer to sign the affidavit, or to have the buyers, the title company hang on to the FIRPTA instead of sending to the IRS. I'll go back to the contract one last time before we part company. It says on line 568, buyer, at buyer's option, either the money will be timely remitted to the IRS or place the funds in the hands of an escrow, third-party escrow. It is the buyer's election, and that's what the real estate agent that was getting so twisted up during the last week, 20-year agent, was trying to convince me. The buyer has nothing to do with it. No, it's in the contract. The buyer decides. And we had a FIRPTA agent who didn't understand that wrinkle because they didn't know that. They knew all the FIRPTA rules, but they didn't know the contract rules.
The bigger issue was the FIRPTA agent was based out of Texas, and maybe in Texas that's how it runs. When I sent her the Florida contract, it's like a whole different shocker in a way.
So it's not something you're going to run into a lot.
I think it'll be more often though.
Oh
I
yeah.
think you'll see way more FIRPTA sellers just with the current climate of everything. Way more people like, I don't want any property here or whatnot, whatever the case may be.
And here's the reality, right? We started talking about why Chinese investors were coming to this country early on. Florida is a great place. The United States and Florida in particular, it's a world haven for foreign investment. Your money is safe, much safer than in some local banks, no matter where you are in the world. Florida real property is stable, goes up 8% per year, sometimes a lot more, sometimes a little less, 8% per year, 8% per year, 8% per year. Foreigners are putting money in the United States at a higher rate than ever, even despite the current administration and the problems and everything else we're looking at. It's not going to stop. So I agree with Taj. It's just going to become more and more frequent. So I created this little cheat sheet. So if you remember, to come back to it, refer to it, hopefully you can get to your answers quickly. And it's really practical. And if you read the contract, it's all in the contract. I know I say that all the time, but it's all in there.
I was going to let people know this outline because this is an important outline, right? This will be under the recording, with the videos recording on newpathtitle.com under Realtor Resources. So you have it there. You can download it. It's actually be emailed out to by Shay as well. But if you didn't get it, if you want to see past ones, you can find it there. We also provide links on, because we put them on the recordings too on RealTrade's YouTube as well, and have links there too. So
and I have to tell you guys, it's nice that we can all come to this forum, and when we don't know something, we can all admit it, because that helps me figure out what to emphasize more when I try to work with you guys. It's like I can't make assumptions that people know stuff. I'm so happy that people are transparent. They come to the pod and they say, like, we don't know this thing, because that pushes me to do more research in those areas and provide better
this is,
explanation.
let's talk about this too while we're saying, as an agent, right? We're out there making money. I mean, what an opportunity now to market to foreign sellers and say, hey, I know the FIRPTA rules. This is what you need to do. You need to fill out this form now, so we don't withhold the 8220. What is it? The 8220.
8288, yeah. I mean,
82
there's a
form
great
now.
idea for a
Yeah,
marketing
you look like a
campaign.
hero and say, hey, you don't have to withhold the 15% here on this if we get this approved and we can get get this done. Otherwise, we're gonna have to park 15% of it.
Right,
Right.
there's a great idea for a marketing campaign. You do a
In
campaign where
the
you say,
reality, there's
hey,
a
do
lot
you
of,
know any foreign sellers? We can figure out ways to get around FIRPTA. Contact me and figure out how. Do you know any foreign sellers not selling because they don't want to park 15 grand? I mean, here's the reality is, do you know any foreign sellers who think they're going to have to pay a 15% tax if they sell? First, it's not a tax. Second, there's ways around it.
Um,
Call me. We can work. We
it's
can.
a great marketing tool.
one more piece maybe I missed when you were talking about it, Jim, because I grabbed a couple calls, is the whole under 300,000 rule that's a part of FIRPTA. And
Yep.
did you speak of that? I'm sorry if I missed it.
No, it's all good. So there's a
Uh,
couple.
go ahead.
Yeah, he's referring to the part under $300,000 going to be living in the property the last 2 years. 10% is only due if it's 300,000 to $1 million, and you're going to live in the property the next 2 years, and you're going to sign the affidavit. And we talked about the problems with the affidavit. If they sign it and they get a job out of state and they have to leave the property before they've lived there 2 years, or they want to rent the property, or any number of things, family illness, their illness.
The reason I brought it up is I saw a deal the other day where it was a part of the listing that said the only way the seller is going to sign the contract is if the buyer agrees to sign this affidavit. So I called the listing agent and I'm like, I'm like, first of all, this place is a complete gut. Why would any buyer, or how does any buyer that's going to live there for the next 2 years even afford to purchase this place? You know what I mean? Like that you're asking for a cash buyer that has money to not only buy your place but to renovate it. And he like had the rule all twisted and how it all works. And I'm like, no, like what you're asking from someone, this property will never sell.
And here's the reality: you get an investor, and we all know investors who will sign anything, and then it works until it doesn't, and then they go to an attorney, and the attorney says, yeah, I can get attorney's fees in that transaction, and they sign up for on a contingent fee, Morgan and Morgan. They'll take the case on a contingent fee, and they find that the parties have some assets, and they'll dive in deep, and they'll put the thing on simmer until it comes to a head, and then they'll name the title agent and the closing agent and the realtors and everybody else, and they'll go after the deepest pocket. Don't be the seller's agent in the deal that don't be the buyer's agent in the deal that Tajay just described. You don't want to be the buyer's agent in the deal Tajay just described. Definitely don't want to be the seller's agent, because you're going to just have a disappointed seller when nobody signs their affidavit. But if they do get somebody to sign it, don't be that buyer's agent.
And I don't remember if you remember this, Jen. We've had a deal before in our office where the buyer, when they signed the contract originally, was like, yeah, if I'll sign the affidavit. And then the day before closing, the buyer's like, oh, I spoke with my attorney, and actually, I'm not signing this affidavit anymore.
Yeah, it was a honey of a deal.
Right.
And it was a really good deal. The buyer's like, yeah, well, I'll sign anything, right? And then they go and talk to an attorney right before the closing. And as a seller, you can't make the buyer sign the affidavit. You can't make them sell, even if they told you in writing, we're gonna sign it. Try, what are you gonna do? Sue them for specific performance? They changed their mind. There was no, you know, so understand the rules. They're somewhat esoteric. They're not intuitive, but once you understand the rules, that aha moment that Wendy had is like, that's the icing on my cake. That's what makes, these pods all worthwhile.
Yeah. I think we had one question, just, how is the time frame to normally be reimbursed by withholdings? I mean, is there a
I mean,
structure?
it's the normal taxing cycle. So you get your return in before the 15th and you wait for your return for, you can file for an early return, but it's just the normal return cycle. How long does it take you to get your tax return back after you file on time? And there was a time, I should also mention, there was a time back in the olden days, and we used to do it all the time ourselves, that we used to hold FIRPTA for any transaction that came along because they were relatively quick. The title agent withholds the FIRPTA, the withholding certificate comes back after a month or two, and you send the money to the IRS, whatever the money was, and you send the balance back to the seller, right? That's pre-COVID. Post-COVID, the IRS is way backed up. Like Tajay said, a year and a half, we've been sitting on $500,000, and the IRS is way backed up. And then the other wrinkle is, and title agents don't even realize this, if there's a loss or there's a problem, their insurance, the title agents, this is esoteric, but the title agent's liability carrier won't cover the title agent for the loss because they say you can't hold FIRPTA proceeds. Most title agents, I shouldn't say most, many title agent errors and omissions policies won't cover title agents holding FIRPTA on behalf of buyers post-closing. They want you getting that money out of their account for all the obvious reasons as quickly as possible. And so now you've got title agents. We had one just the other day who contacted me and they said, well, if you don't want to close it, Jim, we'll close it. We'll hold the FIRPTA withholding because that's what the seller wants and that's what the buyer wants. Once I explained the issues to the buyer, this is the deal that Tajay was talking about with the Texas title, with the Texas FIRPTA agent. The seller was like, oh, hell no, that money's going to the IRS. Absolutely. And the seller's agent was not happy because they were telling the seller that we're going to get the title agent to sit on the money and we'll send less to the IRS than was necessary. And it just doesn't work out that way. The decision where the money goes is up to the buyer. And if the seller doesn't have an 8288B, too bad, so sad, it's 15 or 10%.
Get the 8288B, start marketing that to your foreign sellers. Start doing it. I mean, what a great
If
market.
anybody wants to, I'll be happy to talk about writing the copy for that. It's pretty straightforward. If you're a foreign seller and you're sitting on the fence because you don't want to pay FIRPTA, contact me. It's a one sentence.
Yeah. Wow. This has been a good one, Jim. This has been, like a lot of us, but I know Wendy too. We've been agents for a long time, and I didn't know everything on FIRPTA as well. I mean, it's incredible.
It's in the contract too, and it's not, that's the thing. It's all there so that I had an agent, one more digression. I had an agent the other day. They were melting down. Taj, it was that deal with the TV, and the seller took the TV and the whole 9 yards.
Right.
And the agent didn't know what the contract said, and the agent was melting down because the seller took the TV and a couple other small appliances, and they thought the contract was absolute on their special provisions they wrote in, but they didn't know the default provisions in the contract, what happens when the property is not in the condition it was supposed to be in on the day of closing. And it's a simple analysis. There's a walkthrough to determine that the property that was listed as personal property and the condition of the property is the same as it was on the day the contract was signed. If it's not in that same condition or all the personal property is not there, the seller shall, there is no option, the seller shall escrow 125% of the value of those items and the deal shall close on time. If the pool pump's not there on the day of the walkthrough and the pool pump was there on the day the contract was signed and you hold up a copy of the inspection report, There's the pool pump. When the inspector walked through the property, the seller has no option but to escrow 125% of the pool pump value. What's the title? What's the closing? What's the buyer's agent's only thing to do? Go get 3 options for pool pumps and send them to the seller's agent and say, park the money. That's the only thing. It's the only thing you need to do. And they're burning all these calories talking about where is this and where is that and when's it going to show up and we're going to hold up the closing. I went to the web while I had the woman on the phone. I found prices for TVs, texted her 3 prices of TVs, sent her screenshots of the ads from Walmart and 2 other retailers. And I said, all you do is you tell your seller they got to park this at the closing. Guess what? Taj, did the TVs show up or did they park the money?
Park the money.
Just
Actually, no, they didn't even do that. We didn't even park.
No, we
money.
did a
We
credit.
decided to just do a credit. Like, what if the seller might not ever buy the TVs?
And how many days of heartburn was it? Reduced to a 2-minute conversation. So anyways. All right, you guys, have a great time. Sell lots of property. Call me with lots of questions. I so enjoy working with you.
Awesome, guys. It's been a good one, Jim. Thanks so much.